What's going on, everybody? This is Demetrius Harris, your DAC Funding Broker. And on this channel, I help business owners get access to funding in all types of industries. If you own a bakery, cake shop, dessert shop, wholesale bakery, commercial bakery, cupcake business, bread company, pastry shop, or another food service business, this video is for you. Today, I'm answering some of the most common questions bakery owners ask about business funding. How much bakery funding can you receive? What determines your funding limit? How long are the repayment terms? How quickly can you get approved and funded? What documents may be required? Can bakery owners qualify without perfect credit? Can the money be used for payroll? Excuse me. Can money be used for payroll, ingredients, equipment, renovations, marketing, or expansion? Before we get started, make sure you like, subscribe, and hit the notification bell for more funding content. Let's get into it. Here's the truth. Many bakeries do not struggle because people do not want their products. They experience pressure because ingredients, payroll, rent, utilities, packaging, equipment, repairs, and marketing must be paid before all the business revenue is collected. A bakery can be busy and still experience a cash flow shortage. In this video, I'm going to explain bakery funding limits, repayment terms, qualification factors, documentation, and funding timelines so you can approach the process with more knowledge and realistic expectations. Funding amounts, rates, costs, repayment terms, approval requirements, and timelines vary by lender, funding product, and applicant. Approval and funding are not guaranteed. Question 1. What is bakery business funding? Bakery business funding is capital that a bakery owner may use for legitimate business expenses. Depending on the lender and funding product, the money may help cover payroll, ingredients, packaging, rent, utilities, equipment, repairs, inventory, marketing, delivery expenses, store renovations, working capital, expansion, a new location. Bakery funding is not one single product. Available options may include working capital, equipment financing, business lines of credit, term loans, commercial real estate financing, invoice-based financing for wholesale operations, and other business funding products. The right option depends on what the business needs, how much capital is required, how quickly it is needed, and whether the bakery can support the repayment obligation. Question 2. Why do bakeries need funding? Running a bakery requires more than having excellent recipes and loyal customers. Bakery owners must manage ingredient costs, employee wages, rent, electricity, gas, water, packaging, cleaning supplies, insurance, licenses, equipment maintenance, delivery costs, marketing, seasonal inventory. Many of these expenses must be paid before the bakery earns revenue from the finished product. A bakery may also receive a large catering, wholesale, wedding, corporate, or holiday order that requires ingredients, packaging, and labor up front. Funding may help the bakery accept the opportunity without draining all of its available operating cash. Question 3. How much bakery funding can a business receive? There is no universal funding amount for every bakery. The possible funding limit may depend on average monthly revenue, consistency of business deposits, time in business, cash flow, bank account activity, existing business debt, personal or business credit, requesting use of funds, the funding product, the lender's guidelines. A small neighborhood bakery with limited revenue may not qualify for the same amount as an established commercial bakery with multiple locations and strong monthly deposits. The approved amount generally needs to make sense compared with the business's revenue and ability to repay. Requesting a large amount does not automatically mean the bakery will qualify for that amount. The lender may approve a smaller amount based on the strength of the application. Question 4. What determines the funding limit? Several factors may influence a bakery's funding limit. Monthly revenue. Lenders may review how much revenue the bakery generates each month. Stronger and more consistent revenue may support a larger funding request. Business deposits. Lenders may evaluate the amount, frequency, and consistency of deposits entering the bakery's business bank account. Consistent deposits may demonstrate that the bakery is active and generating sales. Time in business. An established bakery with a longer operating history may have access to more options than a newly opened business. More time in business gives lenders additional information about the bakery's performance. Cash flow. Revenue and cash flow are not the same. A bakery may generate strong sales but still have very little money remaining after payroll, ingredients, rent, utilities, and debt payments. Lenders may want to see that the business has enough room to manage another payment. Existing debt. Current loans, equipment payments, credit card balances, advances, and other obligations may affect how much additional funding the bakery can support. Credit profile. Depending on the product, lenders may review the owner's personal credit, business credit, or both. Credit may affect the available amount, cost, repayment term, and funding product. Question 5. Do bakery owners need perfect credit? No, every bakery funding option does not require your perfect credit. However, credit can still influence approval probability, funding amount, interest rate or total cost, repayment term, payment amount, product availability, collateral requirements, personal guarantee requirements. A bakery owner with imperfect credit may still have options when their business has steady revenue, consistent deposit, stable cash flow, and sufficient operating history. The important point is that lenders usually review the complete business profile. Do not assume credit is the only factor. At the same time, do not assume credit is irrelevant. Question 6. What are the repayment terms? Repayment terms vary significantly depending on the funding product. A short-term working capital product may have a shorter repayment period and more. Frequent payments. A traditional term loan may provide a longer repayment period and schedule monthly payments. Equipment financing may offer terms based partly on the type, cost, age, and expected useful life of the equipment. A business line of credit may allow the bakery to draw funds when needed and repay the amount used, subject to the lender's requirements. Before accepting any offer, bakery owners should understand the approved funding amount, the total repayment amount, the interest rate or factor rate, the payment amount, the payment frequency, the repayment period, origination or administrative fees, prepayment provisions, collateral requirements, personal guarantee requirements, default provisions. Do not evaluate funding based only on how much money is offered. The repayment structure must also fit the bakery's cash flow. Question 7. Are the payments daily, weekly, or monthly? Payment frequency depends on the product and lender. A bakery funding offer may include daily payments, weekly payments, bi-weekly payments, monthly payments. Some working capital products may use daily or weekly payments. Traditional term loans and some equipment financing products may provide monthly payments. Bakery owners should compare the payment schedule with how the business earns revenue. A bakery with steady daily retail sales may manage payments directly from a wholesale bakery that waits 30, 45, or 60 days for invoices to be paid. The payment structure should align with the bakery's sales and collection cycle. Question 8. How fast can a bakery get approved? Approval timelines vary. Some working capital applications may receive an initial decision quickly when their business meets the requirements and submits complete information. Larger requests, traditional loans, equipment transactions, commercial real estate financing, or more complex application may require additional underwriting. Factors that may affect the timeline include missing bank statements, incomplete applications, unverified ownership, inconsistent business information, credit issues, tax issues, existing debt, negative bank activity, equipment documentation, large funding requests, additional underwriting questions. A quick initial decision is not always the same as final approval or funding. The complete process may include application submission, document review, credit and business review, underwriting, offer presentation, agreement signing, final verification, disbursement of funds. Question 9. How can a bakery speed up the process? Preparation may help reduce unnecessary delays. Before applying, gather the information and documents that may be requested. These include government issue identification, recent business bank statements, voided business check, business formation documents, employer identification number, proof of business ownership, business license, tax returns, profit and loss statement, balance sheets, existing debt information, equipment invoice or quote, commercial lease, proof of business address. Not every lender will request every document. However, Having accurate and organized records can make the process smoother. Make sure the bakery's legal name, address, ownership information, bank information, and contact details match across the application and supporting documents. Inconsistent information may create verification delays. Question 10. What documents are usually required? The required documents depend on the funding product. For revenue-based working capital, the lender may focus on business bank statements, revenue, deposits, cash flow, time of business, ownership verification. A traditional loan may require personal and business tax returns, profit and loss statements, balance sheets, debt schedules, business plans, financial projections. Equipment financing may require vendor information, equipment invoice, equipment descriptions, model and serial information, purchase agreement, details about the equipment's condition. Larger or more complex requests generally require more documentation. Question 11. Can a new bakery qualify for funding? New bakeries may have fewer options because they lack operating history, revenue records, and established cash flow. However, availability may depend on how long the bakery has operated, current sales and deposits, the owner's credit, industry experience, available collateral, equipment being purchased, personal investment in the business, the funding product. A startup bakery should not expect the same options as a bakery with several years of stable revenue. New bakery owners may need to begin with smaller amounts, improve credit, establish business banking, build consistent revenue, and maintain organized records before qualifying for larger funding. Question 12. Can funding be used for ingredients and inventory? Depending on the product, bakery funding may help purchase flour, sugar, butter, eggs, chocolate, fruit, yeast, flavorings, fillings, frosting supplies, baking ingredients, packaging, boxes, cups, napkins, labels, cleaning supplies. Ingredient and packaging costs may rise during holidays, wedding season, special promotions, or periods of increased demand. Working capital may help the bakery purchase inventory before customer orders are completed and paid. Bakery owners should confirm permitted uses with the funding provider before accepting an offer. Question 13. Can bakery funding cover payroll? Certain working capital products may be used for payroll. Payroll is one of the largest ongoing expenses for many bakeries. A bakery may employ bakers, pastry chefs, cake decorators, cashiers, kitchen assistants, delivery drivers, managers, cleaning staff, customer service, employees. Funding may help bridge a temporary gap where payroll is due before revenue from large orders or wholesale customers is collected. However, funding should not permanently replace proper pricing and cash flow. Management. If the bakery cannot regularly cover payroll from operations, the owner may need to review product pricings, labor, scheduling, ingredient waste, gross profit margins, operating hours, delivery expenses, wholesale pricing, customer payment terms. Funding can support a temporary timing gap, but it cannot fix a profitable business model by itself. Question 14. Can funding be used for bakery equipment? Equipment financing or other eligible business funding may help bakery owners purchase commercial ovens, mixers, dough sheeters, proofing cabinets, refrigerators, freezers, display cases, cooling racks, bread slicers, dishwashing equipment, point-of-sale systems, packaging machines, delivery vehicles, ventilation systems. Equipment financing may be particularly useful when the bakery needs a specific assets but wants to preserve operating cash. The equipment may sometimes serve as collateral for the financing. Approval may depend on the equipment cost, age, condition, useful life, vendor, and resale value. Question 15. Should a bakery use working capital for equipment financing? The best option depends on the intended use of the funds. Working capital may be more appropriate for flexible expenses such as payroll, ingredients, packaging, rent, utilities, marketing, repairs, and seasonal inventory, general operating expenses. Equipment financing may make more sense when the bakery needs a specific oven, mixer, refrigerator, vehicle, or other major asset. Using equipment financing for the asset may help preserve working capital for daily expenses. The important point is to match the funding product to the business need. Question 16. What is a business line of credit? A business line of credit may give a bakery access to a revolving amount of capital. The bakery may draw funds as needed, repay the balance, and potentially reuse the available credit subject to the lender's terms. A line of credit may help with emergency repairs, seasonal inventory, ingredient purchases, temporary payroll gaps, marketing campaigns, unexpected equipment problems, large customer orders. A line of credit can offer flexibility, but bakery owners should still review credit limit, interest rate, draw fees, annual fees, repayment terms, renewal requirements, personal guarantee, collateral requirements. Question 17. Can wholesale bakeries use invoice financing? A wholesale or commercial bakery may sell products to grocery stores, restaurants, hotels, schools, hospitals, coffee shops, distributors, corporate customers, event companies. Those customers may pay invoices 30, 45, or 60 days after delivery. Invoice financing or account receivable financing may allow an eligible bakery to access part of the invoice value before the customer pays. Approval may depend on the quality of the invoice, the credit worthiness of the customer, whether the goods were delivered, whether the customer accepted the order, the payment terms, the existence of disputes or returns. Not every bakery or invoice will qualify. Question 18. Can large orders help a bakery qualify? A large catering, wholesale, wedding, corporate, or holiday order may demonstrate an opportunity for future revenue. However, a customer order does not guarantee funding approval. Lenders may still review current revenue, business deposit, time in business, cash flow, credit, existing debt, customer payment terms, profit margins, the baker's ability to complete the order. An order may support the business case, but the bakery must still meet the lender's requirements. Question 19. Can a bakery use funding for renovations? Depending on the funding product, bakery owners may be able to use capital for kitchen improvements, customer seating, storefront upgrades, new counters, display cases, flooring, lighting, plumbing, electrical upgrades, ventilation, signage, accessibility improvements, drive-through or pickup areas. Renovations may improve production capacity, customer experience, safety, or efficiency. Before starting a renovation, the owner should understand the complete project cost, permitting requirements, contractor schedule, and expected return on the investment. Question 20. Can funding be used to open another location? Expansion funding may help an established bakery open another location. Potential expenses may include security deposit, lease payments, construction and build out, equipment, furniture, signage, initial inventory, payroll, marketing, licenses, insurance, working capital. Opening another location creates additional revenue potential, but it also adds more overhead. The bakery should evaluate whether the existing location is profitable and whether the new location can realistically support its expenses and funding payments. Question 21. What can cause a bakery funding application to be denied? Possible reasons include insufficient revenue, inconsistent deposits, too little time in business, weak cash flow, excessive overdraft, negative bank balances, high existing debt, poor personal or business credit, incomplete documents, unverifiable information, tax problems, too many recent funding applications, requested amount too high, restricted use of funds, failure to meet lenders' guidelines. A denial does not always mean the bakery can never qualify. It may mean the owner needs to improve certain areas before applying again. Question 22. What should a bakery owner do after a denial? Ask for the reason when possible. Then develop a plan to address the issue. That may include increasing monthly revenue, building more time in business, reducing overdrafts, maintaining higher bank balances, paying down debt, improving personal credit, correcting inaccurate credit information, organizing financial records, separating business and personal finances, requesting a more realistic amount. Do not immediately submit applications to every funding company. Multiple applications may create additional inquiries and make the business appear financially desperate. Question 23. How should a bakery compare funding offers? Do not automatically choose the offer with the highest amount. Compare approved funding amount, total repayment amount, interest rate or cost, payment frequency, payment amount, repayment period, fees, prepayment provisions, collateral requirements, personal guarantee, effects on cash flow, expected return from the funds. Ask whether the bakery can comfortably manage the payment during both busy and slow periods. A payment that is manageable during the holiday season may become difficult during a slow month. The bakery should evaluate the obligation based on realistic average revenue, not only its strongest sales period. Question 24. How should bakery funding be used responsibly? Bakery funding should be connected to a specific business purpose. Before accepting capital, know exactly how much money is needed, what the money will purchase, how the investment will support revenue, how payments will be made, what happens if sales slow down, whether the bakery has a backup plan, how much total repayment the business can support. Do not take more funding simply because a larger amount is available. The goal is to strengthen the bakery, not create an obligation that consumes all other operating cash. Question 25. When is the best time to apply? The best time is usually before the bakery reaches a financial emergency. Do not wait until payroll is due tomorrow, the bank account is overdrawn, an oven has already stopped working, the landlord is demanding payment, inventory has run out, a major customer order is about to be lost, utilities are at the risk of being disconnected. A bakery may appear stronger when it applies with stable revenue, positive banking activity, consistent deposits, and organized records. It is often better to explore options while the business is operating steadily. Question 26. How can a bakery improve its approval odds? Bakery owners may strengthen their funding profile by separating personal and business finances, depositing sales into their business bank account, reducing overdraft, maintaining accurate bookkeeping, filing taxes on time, monitoring personal and business credit, paying existing obligations as agreed, keeping licenses and insurance current, knowing monthly revenue and expenses, tracking product costs and profit margins, maintaining organized invoices and contracts, explaining the use of funds clearly, requesting a realistic amount, applying before the need becomes an emergency. These actions do not guarantee approval, but they can help the business present a stronger financial profile. Question 27. What is the most important thing to remember? Funding limits, repayment terms, rates, requirements, and timelines are different for every bakery. Two bakeries in the same city may receive different results because their revenue, deposit, credit, cash flow, debt, and operating history are different. Do not compare your possible funding offer to another bakery without understanding the complete financial picture. The best option is not always the option with the most money. The best option is one that fits the bakery needs and repayment ability. Now, here's a final recap. Let's review the major points. Bakery funding may help recover payroll, ingredients, packaging, equipment, renovations, marketing, inventory, working capital, and expansion. The possible funding limit may depend on monthly revenue, deposits, time in business, cash flow, existing debt, credit, and the selected funding product. Repayment terms may be short or long and may include daily, weekly, bi-weekly, or monthly payments. Approval and funding timelines vary depending on the lender, requested amount, documentation, and strength of the application. Complete records, consistent deposits, clean business banking, and a clearer use of funds may help prevent delays. Most importantly, choose a funding option that fits the bakery's actual need and ability to repay. So, if you own a bakery and need funding for payroll, ingredients, equipment, repairs, renovations, marketing, working capital, or business growth, use the funding link in the description to explore available options. Remember that approval, funding amounts, rates, terms, costs, and timelines depend on the lender and the strength of the application. And make sure you like, subscribe, and hit the notification bell for more funded content. And also subscribe to my YouTube channel at Demetrius Harris 1975. I'm Demetrius Harris, your DAC Funding Broker, and I help business owners access funding in all types of industries. Thank you for watching, and I'll see you in the next video.